All right, Chainlink, let's kick it off today. We're going to do an in-depth dive on Chainlink. A lot of indicators, a lot of everything. You get it all today. So it could be a little bit long of a video, but we're going to cover more things than we've ever covered, period, plain and simple. So let's get right to it. Let's start up on the daily chart and just look at the facts, plain and simple. Our bottom back in July, where do we hit? Well, we wicked down right to the mid $13 level. And where have we wicked to so far? Right at the mid $13 level. So far, maximum pain, maximum crisis averted still. If we are to have a bounce to the upside, where could we potentially look to maybe take some off the table, de-risk a portfolio, take some profits, or minimize our losses? Because if you've bought above this level, then obviously we're looking at minimizing losses and minimizing damage and wiping our tears and trying again. So let's take a fib retracement tool, extension, and let's look at where we would possibly go. Well, usually, and I say usually, a lot of coins, not just Chainlink, will attempt to retrace to the 618 level. So in this case, plain and simple, you want to, if you get the 618, that's also aligning with other key levels like support and resistance levels, it's probably a good area. So in this case, let's draw this out so you can see these kind of dollar figures here, right? So it doesn't matter where you draw it. You could draw this way. It's just drawing it to the top and the bottom of your local swing high, swing lows, right? So in this case, right around that $23 level for Link, let's highlight that level, right? Let's look at it, $23 roughly. Why that level? Well, look at these here, right? Right, candles there, closing. Okay, there's a couple more touch points. The more touch points you have, at the same time, your fib level, 618, is usually going to be a pretty key level. So if we get a bounce, that's what the level that I would be looking at personally. Obviously not financial advice, but maybe if you have a bunch of Link and you're way down, currently at 1450, and we get a bounce up here in the next handful of days, which will look why maybe that could be a possibility in just a minute. But so if we start working our way back up here, and you'd like to de-risk, that would be a nice level. So we'll cover this more if we start moving back to the upside. Now, okay, let's clear this off and let's see what else we got. Well, zooming out, potentially, where could we drop to if we break this level? I'm glad you asked. Let's go look at our indicators and see why, first of all, why that may not happen initially. I think we're going to need a bounce before we drop a whole lot further. Why? Well, look at our RSI on the daily, right? Anytime that, not specific to Chainlink, anytime your RSI is this oversold in the 20s, you're probably going to have a bounce before you can go lower. It doesn't mean your bottom price is in, right? We're not saying that 1450 is going to be the lowest we're going, but sometime in the next handful of days, we're still looking for that move back to the upside before deciding whether we're going to come back down or not. So looking at this, your RSI, right? Let's zoom in on your daily RSI. We've been here before. December 5th. What happened December 5th? Well, let's go back and look at the price. December 5th. Let's check it out. Look at our low. We'll look at where we were. There's December 5th. The bottom of that wick, it was the last time the RSI was this oversold. Was this the low? Obviously not. We're lower than that now. But what happened next? Well, we had a pretty nice rally over the next week or so, 36% to the upside. So if, say, this is at least our local bottom at 13, roughly 1350, 36%, how high would that get us? Another 36% would get us just shy of that $20 level. How high would we need to get to that 23 level? That is a pretty significant bounce here, right? We're looking at 70% back to the upside. So that'd be a little bit more than a bounce. That'd be a nice relief rally, if you will, okay? So let's go look at some other key points. Now, our momentum is low. Does this mean we have to get a bounce up quickly? Obviously not, right? You don't want this kind of stuff, the messing around up and down. We want to zoom out, and you can see that, a lot of times we do get a bounce out of here. However, I mean, the last time we were down here, back in November, we stayed down here for a considerable amount of time. So, this is kind of, we're still on a coin flip, how long we're going to stay down here. But I like that, we're down here. At the same time, we're down on the oversold territory. So I would still say, just based on those two factors alone, that we need to have at least some kind of a move to the upside before, a potential capitulation or even moving down to a lower low than that 13, kind of mid 13 level. Okay, so let's go look at another thing that we need to keep an eye on: the ADX and the I, right? So the bears are in charge, right? The red. Also, the bears are gaining strength. They're getting a little bit bigger. They ate their second bowl of oatmeal. They ate Goldilocks, and they're now appearing to grow. Okay, so we need someone to come in with a rifle and, you know, make a bearskin rug out of one of these guys. We need to close this gap. Okay, we need the bears to get a little bit tamer. You know, just plain enough. Stupid jokes aside, let's close the gap, just like we want to do back in here, right? So we got crazy, right, back in December, after even that big bounce, right, that we got, but it was short-lived because the bears were very bigly. We need to close the gap up. We need a bullish cross, right? And we need a bullish cross with conviction, like we had back in early January, where we had our nice rally back to the upside. Let's look at this. January 2nd, okay, bullish cross. January 2nd, look at the price action, right? Look at the RSI crossing back up towards momentum. The bounce on the RSI and the stochastics, right? Okay, one other thing. Let's look at, I don't look at this that often, but we're going to look at it today. The MACD. Why don't I look at it often? Well, it has a lot more fake outs than I like, plain and simple. It's useful and sometimes in conjunction with other things, but we're going to look at it today because, you know, hopefully, you know, we're kind of rhyming with this bottom here, right? And notice that we didn't just come down and bounce, but you want to look for these kind of little shapeshifter patterns, right? We have a nice smooth down and we're starting to come back up here. So hopefully we get a bounce over the next handful of days again. And you start seeing, you want to see these candles start shrinking back to the upside, right? So ideally, look at this. See, like these, in a perfect scenario, you'd want to have basically a mirror, right, going down and back up. And then you want them to turn green and a cross. You want to look for a cross. So that's what we're looking for in the next, hopefully, handful of days. And you want a green candle, okay? So this is what we're looking for on the daily for Link. And note that there's your other line right here, right? We need a bounce out of the blue and cross, just like we did back in, you know, mid-December there. That's what we want to have more price action back to the upside. So start adding these to your toolkit and they will help you greatly in the long term. So anything else? Let's go look at. Let's put on our 200-day and our 50-day and look at, you know, where we are based on this. Why are these two lines? Well, these define a bull market and bear market. So you need two check marks to have a bear market. You need to have your price action underneath the purple line, which is your 200-day, and you need to have the orange line, which is your 50-day, cross down underneath that 200-day. Do we have both of those? Check and a check. Yes. So technically, Link is down there in a bear market. Most coins are. Bitcoin is yada yada, right? So it doesn't mean that we have to last down here. So yeah, a lot of people saying we're in a bear market. Technically, we kind of are, right? But we were also in a bear market here, right? That only lasted a couple months too, right? And then we're back out of it. So patience. I don't think we're going to be in a, you know, multi-year bear market by any means. I think maybe another few months at the most, going into maybe Q2, you know, at the big list. Okay, so spending some time down here, I think we're probably going to at least have some kind of a bounce to the upside. A lot of indicators are just oversold. You're not just going to stay. Your RSI doesn't just stay flatlined. It just doesn't work like that. Show me any time in history on any coin or stock market for that matter. RSIs do not stay oversold. That's why they exist. Okay, so and that doesn't mean that your price is bottomed, right? I need to stress that. It doesn't mean like we're low. If we start going back up, we're not out of the woods, right? We want to look. I would say we're probably going to have a bounce and then a retest of wherever that bottom is at that time. So if we bounce and then go back down, you know, pretty quickly, then we could potentially put in a lower low. That would be kind of expected. But once we start, you know, bottoming out and working our way back up, making a higher low, you know, start taking out some moving averages or 21-day. Let's go see where the 21-day is, right? Let's go check that out. So for Link, we want to take step one, take out the 21-day, hold it as support like we did back in August. Look at that. So a bounce up, hold it as support. Right now, it's at under $20 for the first time since back in May, June, July drop. Okay, so as we start hopefully bottoming out here, you can see this 21 day will probably hopefully do something like this. And then we want to start holding it as support, right? Just like we did back here, right? So that's what we want to watch for. And then you will get your, I'm gonna remove this to make it a little more clear. And then once we do that, we can, start making our way. This will start leveling off, right? Now we get the right color. I apologize for the orange color on the 21 day. So we want to see something like this maybe. And as prices move back up, right, this will start going up. The 200 is not going to move very much, right? It'll just slowly kind of taper off here. It's 200 days moving average. So it'll probably do something similar to that. And then what we want to watch for is going into hopefully Q2. We get that bull market confirmed back. And what do we need? Again, just the opposite. We need our price action above the purple line, above the 200 day, right? At the same time, we get the cross of the orange back to the upside of the purple. Okay, those are the two check marks that we're looking for, because right now we're very low, right? We're bear market territory. We're in bear market technically by looking at that, right? So we need Bitcoin to simmer down, have its bounce. Coins can recover as long as Bitcoin's not, crazy going absolute bonkers in the markets. We're okay, right? Bitcoin dominance, as we talked about in our previous video, is low, but in order for altcoins to super recover, we need Bitcoin dominance to just fall off the chart. Otherwise, alt season is going to be put on hold until Bitcoin can. Let's go look at it, right? We're going to make a long video. Settle in. Let's look at Bitcoin. So Bitcoin has just entered, right? With a little bit different than Chainlink. For Bitcoin, we need to look at the weekly chart. Let's take these moving averages off and let's see what we need to actually do. So we're actually looking at the 21-week exponential moving average now, which we are well below, right? We looked at this in the previous video as well. We're currently about 24% under this, right? We have to hold this as support and do, basically something like this, something like this. These are alt season times right here, right there, or when Bitcoin goes up and then just takes a breather. Alts can move rapidly here. What do you notice about these times, right? Alts can move rapidly here. Why? The 21 week is held as support and Bitcoin's kind of going sideways or taking a breather. These are what we need. Under here is not great for alts. Now, when Bitcoin starts to jump again and gets back above here, then goes sideways, yes, altcoins go crazy in these areas. Okay, so this is what we're looking for. We're looking for something like that. We need this to, level off, right? Let's make sure we got the right tools. All right, so hopefully we got something, easing around like this. Bitcoin works its way back up, gets up here, does this, and then if you see a bounce out of here, altcoins can go absolutely bonkers if Bitcoin does something like this, right? Down here, no bueno. As you're seeing, right? Bitcoin's down 2% roughly, 2.5%. Altcoins down more than that, okay? This is how it works when Bitcoin's under the 20-week. Bitcoin is the safest coin to be in. Like it or hate it, it's a fact, usually, right? You're seeing that right now, plain as day. Altcoins across the board, most of them are on average down more than Bitcoin. When Bitcoin is below the 21-week EMA, Bitcoin's the safest based on ROI and just preserving your capital. When you're above the 21-week and Bitcoin's holding out support and we're moving up, altcoins are the place to be, right? Bitcoin here, altcoins here. If you need more help than that, there's a altcoin season index. Let's get it up here, right? That's not it. It's the next one, but that's a good one to use too. If you haven't seen this, the Forex Factory, you can get up to the date, up to the minute news, all about stuff all across crypto. It's more helpful in the Forex trading Forex, but we kind of hit a we hit a tangent here. So this is the tab I meant to click on. We'll see if this one's the right one. Here you go. So you can go to the blockchaincenter.net right there, and you get your altcoin season index. So this is very helpful, can be helpful at least, right? So go check this out as well, and it'll tell you in a snapshot kind of where we are. So once we start getting back up here, it's just, You don't even have to think about it. Go here, check it out. If it's altcoin season, you should probably be in altcoins. If it's Bitcoin season, which we're closer to now, it's probably in your best interest, or your portfolio's best interest, to be in mostly Bitcoin. The proof is right in front of you, right? Bitcoin down 2.5%. Altcoins down more than 2.5%. Okay, so hopefully I made that clear as mud. The crypto fear and greed index, we're still in extreme fear. So we've been down here where we just basically were on life alert here. The hospital's watching us. We got Peter Schiff over our bed. Hopefully he doesn't have a pillow or a gold bar. We'll be back. We'll be back laughing at Peter shortly. Let's look at our quote of the day. May you live all the days of your life. That's deep, man. The simplest quotes sometimes are the most impactful. Love it. Don't waste your time. Do what you like. All right, what else we got? All right, car of the day. I mean, if anybody knows what this car is, I would be blown away because I didn't even know what the hell it was. I was just searching for rare cars, and this is probably, it's a Ferrari, right? You got that, but the Ferrari this is a one-off Ferrari. Only one. This is it. It's a concept car, and it's in a museum now. I couldn't even imagine what it would go for if it sold. The Ferrari Rossa 2000. It was made like 20 years ago, right? If this reminds you of something that just came out last year, then you're probably a Ferrari fan. What could that car be? Well, the new one that I believe is based on this one, and you'll see why in a second. This is just my opinion. I don't know if it's true or not, but the Ferrari Monza SP2 doesn't it look pretty similar, but 20 years in the making. So they actually made this one. This is a rare enough car. I mean, you're shelling out millions for this thing, but it looks pretty darn similar to me 20 years later, right? So pretty impressive. We'll see. SP2, the Monza SP2 is this one right here. The Rossa, the rarest Ferrari ever, quite literally, is right here. And I can't believe there's no damn fence around it. I mean, you got, this kid is probably 40 years old at this point. It's going to be in the, the 90s or, right at 2000. It's probably a Concours d'Elegance in Amelia Island or in Concours d'Elegance in California. That's the only two they have that I'm aware of. And I would guess it's at one of those and probably in California. Let's get real. But, I mean, definitely the dates. Look at the dates. It's definitely the early 2000s. And look at this dude's pants. The shorts. I mean, the jean shirt, the little vest. Look at these guys. This dude's got white socks on back here still. He's got his dark shoes and the white socks. Classic early 2000s. You got the 2000 Bugatti back in there. What else do we spot? Oh, looks like a little Mustanger. I'm just looking at this picture now. What are we? Oh, another Bugatti back over here. Check that out. Whoa, two Bugattis. The EB110. Who knows about that? I just got a model now. Maybe I'll have car of the day tomorrow. Foreshadowing, unless you're watching right now, then you already know. All right. Well, mile a minute. All right. Hopefully that helps somebody. If not, then bye.